Hey everybody, it's Chris Robinson, Robinson Ag Marketing with today's post-close grain and livestock comments for June 22nd. Well, 8 more days till the USDA hopefully will throw us a bone. Um, Not really what you wanted to see for a Monday. D's corn down 4.5 cents at 439 and a half, traded at as low as 439. No new news about any more exports, anything like that. If you're watching D's corn, the low is 434 and a quarter. We're at 439 and a half. This is why I suggested even if you had 470 or 480 puts on that we rolled them down to 430. I want a safety net in case that fails, but I don't want a lot of money tied up into a D's corn put here right when we're at contract lows. Is there still downside risk? Absolutely, positively. If you look at July corn, it traded 411. There's an old gap back there on the continuation charts that everybody's talking about. We've talked about it for a while now. Getting sick of talking about it. It's at 405 and a quarter. But if certainly if $4 was to fail in spot corn, that's going to put pressure under the farmers out there that don't have hedges on. It's hard to believe that 2-3 weeks ago we were at 450, 460, and for me to sit here and say, oh, don't worry, it can't go any lower, that's would be a lie. So keep a cheap put under these, especially if you're not willing to sell. If you're just going to hold it, and I look at this map, I mean, we're at 411. There really isn't good support till about 380. So is that 30 cents worth anything to you? I'd say you don't have to spend a lot to defend against possibly losing 30 cents there. Now, me pointing out that there's 30 cents of risk is not me promising that we're going to go down there. It's not me being bearish. It's me trying to help guys that are sitting on stuff that they haven't sold, looking for ways to stop the bleeding on paper. That's what a put does. Here's the rub. You've got to be willing to spend 3 or 4 cents on a put and lose money. Because if you lose money on the put, that means we get a rally in the cash market. July beans, spot month 11.15. Novi beans down a penny and a quarter, 11.41. Continue to talk about that 35, 37 level. We've talked about it probably a little bit too much, but the 37 level is the halfway back point of the entire year range. We started the year in January, believe it or not, at 10.55. We peaked out at 12.14. So I think that 11.37 area is going to continue to be a battleground because it is halfway back. So bullish or bearish. And also too, if you're one of those people that you want to know where you are relative to what you could have sold it, if you sell it here, you're right in the middle of the pack. In the July wheat, down 8.25 cents, settled under $6 at 5.97 and a half. Now, this is coming off of what we've had, pretty good bounce last week. So no follow through. That's concerning. Again, it is Monday. Possibly we'll get a turnaround Tuesday. My prescription for anybody that's holding anything that's unpriced, it's the same thing. Keep a cheap put under it, um, especially through the acres report. You can go do a weekly option that expires a couple days after the report if that's all you need. You do not have to go out and buy 30, 60, 90 days of protection because that is more expensive. So you've got risk coming up on the 30th. It's up to you whether or not you do anything to defend that risk. And you don't have to do 100%. Maybe you do 20%, maybe you do 30%, but whatever it is, it may make you feel better, especially that morning of that report, if that report comes out and it's not what we're all looking for, which is a bounce. And what's going to come out of the report, it's going to come down to this. How many acres of corn did we lose? Was it over 1 million? Was it over 2 million? Or was it nothing? If we were to get, a couple million acres that we lost, then yeah, we're probably going to get a rally. If not, we're going to continue to be in this disappointing market where we grind lower. So since nobody knows what that's going to hold, um, and also as day goes on, as the days go on, it looks like we didn't get the drought, but Europe did. I don't know, people are touting the drought in Europe like it's going to affect us. It's really not. Um, what may affect us is if we get too much rain and we get yield loss there. So at this point, when we're sitting on a after dropping 70 cents in corn, what are you looking at? You need something to give us either increased demand That's got to be China, or a yield loss, which has got to be weather related. So at this point, with all the rain we've gotten, it's got to be, we've shifted from worrying about is this 2012 where we got a drought to is this going to be a situation where we get so much rain that it drops yields. So that's where you're at. As far as marketing goes, it's going to be, a difficult row to hoe. Keep your keep your cheap puts on, and also too, if you think that there's a chance that we may get some sort of a rally, you don't have to go out and spend a whole lot for call option. You can go out and spend 10 to 14 cents and cover yourself up for the next 60 days with a September dated new crop corn option. Ditto for beans. You probably have to spend 12 to 15, possibly 20. But again, if you are leaning bullish, or if you think you've sold too much, or if you went to bed last night and had a dream that we were limit up after the USDA acres report, calls are cheap. Moving over to the protein complex. It was a kind of a friendly cattle on feed. We did finish higher on the day, but we opened up really strong. August fat cattle looked like it was going to take out 250 and go up and challenge its contract highs. It didn't. It stutter stepped at 250 again. We settled at 247.35, up 70 cents. August feeders at one point looked like we were going to go through 375 and take off. We sputtered at 373.15. We did settle up 380 on the day though, at 370.425. So a good day. Again, it started out looking a lot more promising than it finished. And the hogs, what can you say about the hogs? Hogs are fighting tooth and nail to try and find a bottom down here. If you look at these hogs, we've been in this trading range between 73.20 and about 74.50 for the past week and a half, trying to come off the 7-month low. Um, that continues to be an issue there, and we'll get the commitment of traders out here, I think, today. But we did know already that the funds were long cattle and short the hogs. July hogs finished down 37 cents at 94.65. Again, we have to hold on and see. Will 94 cents hold? If it doesn't, if we take out 94.20, that's going to be a new 14-month low, and then you start going back in time in the time machine. There's uh, a couple points back there where we might find support, but there's not a whole lot there. So 94 is big. I think if 94 fails, it opens the door to 92, possibly 90. So right here with 5 cents worth of risk, do you want to have expensive puts? No, but I don't want to go without a put either because, if we drop 5 cents, it'd be nice to have something on. So get yourself a penny put, half a penny put, have something down there, a disaster put. Um, and if you've got a lot of unsold animals, that's your best bet here right now. Vice versa, if we were able to claw away and get away from here, if you are selling animals into 14-month lows, I don't think there's anything wrong with going out and buying cheap calls out through December or a little bit longer because you want to be in a position to catch a recovery if we do get a recovery. So that's it for this Monday. Kind of a disappointing day in the grains. We looked like we were going to try and find a bottom last week. I think we're going to kick the can until the report on the 30th. We don't really have a weather issue here. And the other thing pressuring this market, crude oil. I never thought I'd hear the day where people were upset that crude oil was lower, but it's really going to put pressure on probably the rest of the commodities if that whole inflation story goes away. July crude oil was at 74.82, so under 75. There's an old gap there that I call it the war gap, which is around $67.83. That's probably the next big target for the robots if they do push us lower. Silver lower, traded as low as 63.35. $62 is a big level for silver. If that's something you're looking at there, we've been down there twice. I do cover that. 95% what I talk about is grains, livestock, but I do cover silver for some guys that I work with to trade hold silver because at the end of the day, what do I do for you? I do the homework. I do the charts for you. I try and point out key areas that can help you make better decisions. So on that note, this is Chris Robinson, Robinson Ag Marketing. If you're looking for help, give me a call, 312-638-8868. I have a daily letter. Tonight, I'm going to be posting the webinar for the week. I was going to do it yesterday, but I kind of wanted to say how we traded here today, Monday. So that'll be going out tonight as well. It's a 15-minute webinar. Um, I do it like a PowerPoint Zoom meeting. You can go through and stop it and listen, but I point out the areas that I'm looking at from a risk management standpoint. So, all right, guys, this is Chris. Have a good night. Thanks a lot.